welcome back to the rationalinvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello everyone, welcome back to the rationalinvestor.com the Broiler Chicken Show. Back. I would love to be able to make this like full screen. I just have no idea how to do this stuff. Chris is such a good job. He puts together this newsletter. It just looks so pretty. Thank you very much for your assistance, Chris, and consistency. All right. Oh, I suppose you didn't hear me singing to all of you there. So I guess we better start the whole damn thing all over again. We'll set it to medium there. I wonder if that's better. Bakak! Can everybody hear the bakak? Thank you. So you can see Chris is hard at work. He's at his job, at his post, trying to be the best damn show director TRI's ever had. And I'd have to say, you are number one. You're number one. You're number one. All right, so back to our silliness. Welcome back to the Broiler Chicken Show. Probably, I don't know what would be the best use of our time here. What I usually ends up happening is I go through this newsletter, and as I'm reading stuff, I get distracted, and I start talking about the implications of this central banker policy, or the implications of this political event, blah, blah, blah. I don't know whether it really helps you too much. I was simply saying, I think it's stating the blatantly obvious that we have obviously a very significant political event coming up here in November. And frankly speaking, I don't mean to sound rude. I'm sure there are other people that have expressed this sentiment. The only thing is the Beamish has a bad habit of just saying exactly what he thinks, and sometimes it's politically horrifically incorrect to say these things. But I actually think that the 1%, they wanted to see Mr. Trump murdered there. I think, this is just my opinion. Everybody should be able to be entitled to their opinions. I think they wanted him dead. So fascinating how history turns here. This is such a good analogy why we should never ever get into the business of predicting the future. Just don't do it, because you're never going to get it right. And you can make sort of grandiose sort of I think this is going to happen. That's fine and all, but I certainly wouldn't, place bets in serious portions of your money on predicting the future. I would just simply say, and it's everything that we teach everybody, is you're here to trade your setups. When you see a number of criteria all come together that you have seen in the past, that usually good things, i.e. Market moves in the direction you're expecting, those things happen when you see all these different criteria line itself up. And then you just simply take the trade. And the great part about, living that kind of life is it actually relieves you a lot of stress. You're just like, well, trade my setup, man. Got to live by the sword, die by the sword. It was interesting. The market of note that I put in this week, this is a really good example where when I came out with this tweet, maybe actually be interesting to see how long ago this was. And I think I've talked to you about this before, right? That was back at the beginning of June there, when this trade setup actually came in. But interesting. So that didn't link to the tweet. That actually linked to the chart. I guess that makes sense, because I didn't really give Chris a tweet to look at. I just gave him the chart link. Oh, well. Anyway, what was interesting is, and what I really try to do with all of this is I try to be like the demonstrator of best practices. I actually go out on social media and I actually said exactly where the trade fires and when we strapped the position on. And, the irony of it all is that the public actually, there was one person that actually put up like oh, we're all laughing at you, you stupid idiot. You don't know what you're doing. And frankly, I had no way of knowing what the hell was going to happen. It's just a setup, reload zone, bearish divergence on these pushes higher, big old fat M. So let's see what happens. And here we are all the way down here. And what this is fascinating because this is the runner part of the trade. You can see, I think it's in your best interest to try and take partial profits at things like 2-to-1 risk reward. Then just move your stop to scratch on the remaining. And now you basically have a risk-free trade. You're in the trade. You've already made a bit of money. On the first part, you can't really get hurt. I mean, maybe this thing gets stopped out at like a $5-10 loss or something. But on balance, most of the time, these stops are just tripped up. Like the Bitcoin one, they just took price up to the little stop out level, the scratch level, and then boom, straight back down. And that's actually what usually happens in the markets. It drives you crazy how many times that happens. But it's just good best practices, I think, to move your stop to scratch on that runner. And in this kind of scenario here, this short might be working for a very, very long time. What I thought was interesting, and this is kind of it's a different way to approach this week. I don't know whether I should get into this now or whether we should review the newsletter first and sort of the graders, goings onsers. I think we'll do that, and then we'll circle back around. We'll finish off with Bitcoin and Ethereum and all that kind of stuff. So I've teased you all there. So if you want to know where I think Ethereum and cryptos are going, you better stick around for the second half of the show. I think Chris said that we had one question in the Q&A document this week. So I'm surprised that site participation has just fallen right off. But I think what's happened here is I think that Joe Sixpack is literally hanging on by a thread here. In the past 10, 15 years, I started up this site in 2013, 14. Really, 2014 is where we got going in earnest, I suppose. And that was post great financial crisis, which was nothing more than the US banking industry lending out way too much money that they should have never done. Of course, they understood the hyperinflationary nature of money and the way that every 80 years we do these great resets. So they knew exactly what they were doing. And the unwinding of that stupidity, just raw, utter greed, just watch The Big Short movie. That's an excellent analogy. The Chinese sushi eating. I don't know whether he was a mortgage broker or what, but that guy is the absolute perfect analogy of and I hate to say it, but it's like these economies get going in a certain direction, and then the participants that are in the certain direction that the economy is going, if they happen to be on the right path, on the right beat, they can become incredibly wealthy. But what ends up happening is that they start kind of like morphing into the actual product, and their whole basis of existence is based on this bubble just keep inflating and just keep going. And I hate to say it, but I actually see it happening in my country where, something like, I don't know, I think it's like 40% of the entire Canadian economy is based around real estate. So you can imagine a guy like me that comes along and says, that's a bubble, and no, there's no way in hell I would invest in that. At the very top of the market, this is exactly like what happened in 2000 with my poor old buddy at Nortel, John Roth. And now because he was a CEO and he was selling a lot of stock in a very popular sector of the market. At that point, it was the telecom infrastructure companies that were building out sort of the foundations for this just messed up world that we live in with this silly interneting. they got taken to such absolutely ridiculous valuations, and that was sort of all about the sort of the paper asset bubble of the that respective greed cycle, the baby boomers peak earnings years greed cycle. But he was like literally laughed at by university, Princeton University. Geez, that's kind of a place of smart people. Blah blah blah. But he was laughed at by a gentleman by the name of Alan Blinder, and I don't even understand why nobody over the years has ever held Mr. Blinder to account. I remember the day that it happened specifically, and what's so ironic is I also remember the same time there was a cute little analyst that came on, and she in after hours market she put a $1,000 price target on a company called Rambus. I don't know if you've ever heard of them or not, but needless to say, the company never hit $1,000. Dot-com bubble burst, poof, and the whole damn house of cards collapsed. It was right around the same time. And actually, it was interesting because in my junior years, that was when I was a broker in my, I guess, my late 20s. Um, Hell, I even got shilled the whole idea to buy into the semiconductor space and all of that. So it was, a fantastic educational learning experience. But the point being that what ends up happening is the people that speak reason and that kind of like, I hope you understand all of this stuff moves in cycles. It all moves in circles. I hope you understand that we're at like an extreme end of the cycle here, and things will probably need to sort of, come back to the mean. And at that time, it was almost impossible to think about even like war. I mean, everybody in the late 1990s believed that the way you settled, they believed in the late 1990s that there was no going to be any more wars. Soviet Union was over. The communist Chinese were basically on their knees. And went very quiet and very agreeable with the West, and really toned down the intense rhetoric. In fact, I even remember specifically the British handed over Hong Kong back to the Chinese. I think it was that 90. I want to say 96. And actually, ironically enough, it was right around that event that we had the what they got following the handover of Hong Kong, because the Chinese propped up the market. Oh, we're all friendly. Everybody's happy go lucky. Look at how friendly we are. All peaceful, peaceful. And then as soon as that Hong Kong was transferred back to the Chinese, they had what was called the Asian contagion. Then the whole Asian market just completely collapsed. Um, and that was yet another sort of hallmark going through that period that, oh, we'd never have wars again. We're all happy go lucky. We're all peaceful. Everybody get along. And so, into that peak of the dot-com peak, nobody could ever conceive something like a 9/11 happening. Or, like Rumsfeld coming out and going, we mysteriously lost $1.2 trillion and we can't seem to find it. And oh, by the way, for safekeeping purposes, we've kept all of the audited files in this fortress called the World Trade Center in New York. I mean, you can't write better fiction than reality. But wow, did that bubble ever unwind in spectacular level fashion. Then we spent the next 10 years trying to pick up the pieces from these manufactured wars that were created. And of course, that in itself pretty much laid the groundwork for the great financial crisis, which was nothing more than, like I said, it was the banking industry just lent way too much money. Never should have done it. God, I remember specifically there was this funny little roly-poly-oly American guy, late night TV. Geez, I don't even know if they even have late night TV anymore. He used to always come in and go, lost another loan to DieTech. DieTech.com. Refinance your house at great rates and get lots of money. And the loans, the U.S. loan mortgage business was just insane through that period. So, I mean, ironically enough, the bubble was actually totally self-explanatory. And we used to say things like, and I've told you guys this before. I mean, this is nothing new. We used to say when I was a full service broker, right? You'd sit down with clients, and it wasn't a question of whether they liked or not liked. I looked over at YouTube and somebody said, "I like your rants." Instantly, that hit my subconscious. Anyway, thank you. I don't know whether my rants are any of any value, but I'll tell you, they if it's one thing that I definitely can help all of you with is I have a memory like an elephant for market events and news. And I fancy myself a historian by trade. I love studying history. And ironically enough, very few people can stump me when it comes to history. I know it probably, ironically enough, I know American history better than most Americans do, but we don't need to go into that today. And I think half of the reason why I am able to speak with all of you with such ease and so with frankly speaking, with an air of authority, is I was there. I remember this specifically. You go out, even you go out and quiz CNBC people, and I bet they don't even remember that John Roth interview. But I remember it like it was yesterday because, of course, at the time, Nortel Networks represented 35% of the Canadian economy. One freaking stock. I mean, it was pathetic. And I don't know, and this would be a good opportunity for you people over there on YouTube to interact with me. If any one particular sector represents more than how much of an economy, you are officially in a bubble. Let's see if anybody can answer that question. And just for fun, let's ask Google or whatever the hell this thing is that I search with. What percentage of the Canadian economy is real estate in 2024? I go a little bit higher there, crypto not 30%. Yep, you're getting into that area. So 35%, that's usually trouble. Remember, I made reference to Nortel being 35% of the entire Canadian stock market. That was actually your tell that, oh boy, we're in big trouble back in 2000 even. And actually interesting, they probably won't even give you the data here because they know full well that if the public did see how much the real estate industry represents the Canadian economy, they'd probably like, oh shit. Wow. What the hell is this? Yeah, I don't even see it on here. I don't know what the better question is. They won't even tell you what the percentage of the Canadian. Don't even tell you. Anyway, that'll be a fun research piece I'll do for the site tomorrow. And of course, anybody watching this video, if you can pull up the actual data pretty quickly. I mean, look at this. And if anything, you want to know a sign that there was a top in the Canadian real estate market. I mean, there's people now with YouTube channels that are making a living just basically talking about the Canadian real estate market. You got to be kidding me. This is nuts. But it just goes to show. I mean, that is yet another sign of a bubble. And frankly speaking, I think the bubble's already popped. We're on the other side of the bubble popping. And now it's just a cleanup. And of course, any student of mine knows that we should be bearish of the Canadian dollar, the Canadian market, and any of these commodity related markets, well, probably into 2035, maybe even 2040. So a little disappointing that I can't see this number offhand. And the problem also too is my eyesight is terrible, so it's very hard for me to just to read this just on the screen here. God, I don't get old. It sucks. Anyway, what a see. I mean, look at this. So it's like these are the questions I guess people are asking, but that's not what I'm asking. And so they trying to. What's the outlook? No. What percentage of the Canadian economy is real estate? That might be better. 7.8% of the nation's GDP. No, that is completely wrong. It's got to be way, way higher than that. I do not believe that number by even the slightest stretch. And then, of course, anyway, we're getting off topic here. I'm not quite sure how the hell I got onto this band. So, I would argue that going through this fear cycle that we're in right now, probably like cycle wise, I'd almost think that in comparison, I think that, probably a good comparison would be we're probably in like maybe 2005 right now, maybe 2006, somewhere in that area. So we all know, of course, 2008 was an absolute disaster. 1987 was a big stock market crash, but ironically, what happened there in the U.S. is it was just a 50% retracement of the monstrous bull market. So, just to give you an idea, I suppose, I don't know, kind of wasting time again, but not a bad idea. Just take a quick boo. If we go, what's the best way to do this? No, I don't want to do that. Just do a new one. I don't even know how you do new ones without. So we'll go Dow. So here we are, 2024. The most recent cycle pivot. If we look at the Dow, tell you that's looking a little dangerous, but I wouldn't be surprised if actually we work our way higher here. So I guess what I'm referring to here is this was the last sort of fear cycle coming out of the 1960s. Kennedy was whacked here. Johnson took over the US presidency. You can see, I mean, to all intents and purposes, the market didn't do anything. And the irony of it all is that if you take the money printing out of the equation, this looks just about exactly the same. Back then, theoretically, they were on the gold standard, so they weren't allowed to fuck around with the money supply. But there's basically our same story. So you can think of this as Kennedy being assassinated, and you can see how basically over the past 20 years, we've done absolutely nothing. So it looks similar to this is the 1960s consolidation. Then breakout, then you had your huge run up here. And I get the feeling that this is what kind of environment we're in right now. And you notice that if we just take a high to low and then draw things like 50% rolls, the 1987 stock market crash really wasn't a crash. It was actually just a very healthy, very normal 50% retracement of a pretty substantial move up. So ironically enough, I would expect actually the same thing to happen. But, I think the more important thing, especially for you level oneers who are just learning this now, the cycle pivot, right, was in 1980, 81, right? And you can kind of see that through this event, boom, there's your technical breakout. And they often say that the 1980s, 1990s into the dot-com boom, that greed cycle peak. They often say that that bull market actually started in like March of 1982. Why? Because that's where the bonds actually ended up topping out. Well, I guess the bond prices bottomed out, the yields topped out, and that laid the stage for the big rally. I think we're in a very different world right now. I'm not going to say that this is the same scenario, but I think it's important for us to acknowledge that, like, these crashes that happen, they don't happen like the market didn't crash here. The market actually got way overextended and it was long due for a 50% retracement. And this is a really good example where there were lots of people through all of this all saying, this market, it's got to crash. But the market just keeps going up and just keeps making a fool of the people who are calling tops. And then the market finally does crash, 50% retracements, blah, blah, blah. Technically done. Central bankers, central planners come out and just dump tons of money. At that point, Alan Greenspan was the US Fed chief and basically said take rates to as low as we have to make sure that the FCASI keeps going. So what a big surprise. At the 50% level, we found a base and then the feds came in. As soon as the feds come in and actually start taking rates down to nothing, that's when we're probably pretty close to some sort of bottom. Interesting thing about the 1930s, which is actually what I think is more similar to the world that we're in, is you actually had a US president through all of this that was like, we're not going to bail you out. You go and buy stocks and you chase markets like this and you lose money. It's your own fucking fault, you stupid degenerate gamblers. And of course, how did that go? Did that win him any votes? I mean, the irony of it all is that what we really need in this world to make sure that our currencies don't absolutely collapse underneath our feet is we need more people like this that just say, look, you can't get something for in life for nothing. You're going to have to go and fucking lift a sledgehammer and start working, for Pete's sake, to actually get a paycheck. In this world right now, and I see this more and more and more, this a lot of it, and I don't know whether it's the millennial generation or whether it's the Generation X. No, it's not that. That's my generation. What's the name of the generation that comes after the millennials? Anyway, I'm hearing more and more stories that these people, they don't want to work at all. So that's what's really scary about all this. And they're just absolutely convinced that they'll just, the central planners will just, give them free paychecks like they did through all that sickness environment. And it really made me angry. Like through that whole sickness environment, I remember there was one guy in particular on the site who was like, I'm not paying rent anymore. Fuck it. I don't care. Come after me. So catch me if you can. And he like literally didn't pay rent for like, I don't know, 6-8 months. And that was just money in his pocket. I'm going to go buy more Bitcoin. And it's just disgusting how, like economics 101 completely thrown out the window through that damn fear cycle apex. And that's what often happens. So I think at some point now I have to, because I lived through the whole dot-com boom. I lived through Mr. Princeton laughing at Mr. Roth, and yet Mr. Princeton should have been drawn and quartered for his horrific economic advice through that dot-com boom, which was just a disaster. And it wasn't until probably a good 5-10 years afterward I was able to really articulate what happened there through that event. So that's like fast forward. And notice too, this is what's really scary about this, folks, is if we actually take the money dilution, right? This is the market working like, oh, there's nothing really special going on here. The Fed isn't diluting the fuck out of these things that we're valuing this asset in. If we actually look at this asset in non-diluted terms, so we're going to take out all the currency manipulation that's going on here, mysteriously, look how similar this economy now looks to that Great Depression economy. Like, holy crap, it's exactly the same picture. I mean, it's ridiculous how exactly the same this is, because you can clearly see that, we we recovered off the low, then we put in a base, and away we go, breakout and new bull market. Well, look at us go. Is this not exact? I mean, the only difference is this low, which was the Obama US housing crisis low. It was lower than this low, right? So in this environment, Junior Bush came along and, he manufactured wars overseas to all of a sudden just get the Americans to buy into, hey, we can just spend our way out of this, and national debt. Nah, we don't need to worry about any of that shit. Just dilute the fuck out of the currency and everything will be fine. And of course, I think there's a law in physics that says matter can neither be created nor destroyed. And I think what you see in the stock market these days with these ever rising higher and higher and higher prices, this is a commentary on this idea that, there are people in our world that actually think that, hey, this shit can just keep going up forever. But that's not actually what's happening here. What's happening is that they're just, and the interesting thing is that actually most of you that watch this video channel, you already know this. This is like, Brian, you're preaching to the choir. We already bought the message years ago, right? This is that damn burr. So anybody, who's watching this for the first time, sort of scratching your head going, well, Brian, I don't see how this, and interestingly enough, this was the last, what do they call it? The fourth turning. This was the last fourth turning window. And I am actually hearing people start to say that this is, and now we actually have people like literally coming out and saying, before it was sort of like, well, maybe, maybe. But now we're actually hearing people say, if this thing will print, but it doesn't look like it will. It probably printed it way back there. They're actually saying that, that we are officially now into the fourth turning. So here it is. Merry Christmas. Happy Hanukkah. Happy Kwanzaa and all that kind of fun talk. So ironically enough, you go, most of the people in the public will look at this and go, well, I don't know what you're talking about. These look like apples and oranges. And this is why it's so difficult to explain the, I honestly, there's no other way to describe it, in my opinion, other than criminal. What the banking cartel has done to this society, and not necessarily the baby boomers, right? I think Jerry and really Biden, I mean, these guys half dead, Trump. I think all of these people are all part of the baby boomers. It's not the baby boomers that are going to suffer here. The people who are going to suffer are Gen X. That's my generation. We're literally going to have an entire sort of generation, our generation's wealth stolen from us. And then really the millennials. I have a funny feeling that kind of like what you saw out of the Great Depression, I think this is basically our economy going forward here, which means that we're going to have substantially higher stock prices. And the interesting thing about this too is that notice through this coming fear cycle, they won't have the currency dilution option on the table anymore. They've already printed the fuck out of the currency. So what's actually going to happen here is the stock market and the whole economy in general needs to rise and play catch up with the money printing. And then we're going to go through probably a 15-20 year consolidation up here. And this consolidation, just like I had said with that 87 crash scenario, you can clearly see that there are going to people that are going to call out and say, hey, that Beamish guy says M's are bearish. All right, time to go bearish, not time to shorten it. And they're going to get their heads handed to them. And that's sadly like the hallmark of growth cycles. And in a weird sort of way, you can kind of see that same image starting to form here. The issue here, though, is that, what number do we actually hit when we go to the upside here? I mean, the numbers are staggering. I think that this is more like a generational cycle pivot. So that means that I'm thinking, and I've got all these presentations, so I kept my bookmarks on here because I like to show you these different cycles. Let's see. I think this is the one I want to do, but it might be a different one. Is this the right church? This is nope. That's basically what I've just been talking you through. Spend the past 20 minutes. But might be actually, I think it might be this one. Given the fact that the money printing is already done. No, it's not that one. All right. Oh, might be this one. So many charts. Yeah, here we go. So I think, and actually interesting, this chart was produced not too long ago. It was the middle of 2024, I guess. I think that we're actually going to follow a path a lot more like the greatest generation coming out of the Great Depression. This is our great reset. Thank you very much, Klaus, right? And all that nonsense. And I think this is what our growth cycle is going to look like here versus the baby boomers, where it went just absolutely crazy. And I wouldn't be surprised if, like I said, there's going to be people that are going to be calling tops and saying that, all right, this is the end of the bull. And this thing just keeps grinding on and grinding on and grinding on and grinding on. As we sort of, fill out this, what does this new world order look like? Anyway, that's my 2 cents here as to what to expect here going forward. And I should probably update this chart. Anyway, and this is a really opposite view of what almost everybody, if you turn on any social media, any kind of, every single person's calling for crash, 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 crash. And I don't think the crash is coming, folks. If anything, like I had said, this is the 1920s runaway bull market. And you couldn't find anybody that was calling for crash here, like nobody. And then, same sort of thing, fear, greed cycle. This was our dot-com boom. Nobody was calling for crash here. Like I said, Mr. Princeton was laughing at Mr. Roth for actually selling his assets. And keep in mind that company that Mr. Roth was president of, it was bankrupt, zero. Stock was worthless within 5 years, right? By the time we actually hit this part of the cycle, it was over. So, with the whole money printing, obviously, they've made our lives much, much more difficult. And this is a very risky world that we're living in right now. Very, very risky. Anyway, only time will tell, but I still think that this is basically our path going forward here, this yellow line. I think that's what this cycle is going to look like, which is going to take a lot of people off guard. Like I said, this is if we take the money printing out and we just say, well, what did that last fourth turning look like? Great reset. Thanks, Klaus, you dickhead. And what was the aftermath of them getting away with, the great reset, hyperinflating the economy? Well, the aftermath was just an absolute runaway bull market. And they always lament about, oh, remember the 1950s and, the low inflationary environments. What they don't talk about is the 1940s and how they were absolutely hyperinflationary. That's the conversation that's conveniently skipped over. So anyway, let's hope we can all get out of this decade in one piece. It's going to be a bumpy ride, folks. I'm not going to sugarcoat that. That's for sure. Okay, so there's your backdrop. That's sort of like a 10,000-foot view. I am a little concerned. I don't know whether prices like gold and the price of Bitcoin, I don't know whether they really necessarily go down. I think what ends up happening here is if the bankster class gets away with this whole great reset crap, I think what ends up happening here is, as I said, the stock market goes absolutely crazy. So what ends up really happening here is we cycle back and forth between desire to own hard assets and desire to own soft assets. So how do you see that on the price chart? Well, the easiest way I think is to look at something like the Dow Gold ratio. And this is the preference for soft assets, where it takes like literally 40 ounces of gold to buy one Dow Jones Industrial average unit. This was the US housing crisis. That was the bottom of the cycle. The fact that they sort of muddled along for the next 5-10 years. I mean, this right here is Brian's, actually, I guess it would be over here. This is Brian's, fear, greed cycle apex, the end of 2017, beginning of 2018, somewhere in there. But looking back in hindsight, you can clearly see that this panic blow was the cycle low. So, this was the 1980 cycle trough. So this was sort of we want to buy hard assets. We want to buy hard assets. We want to buy soft assets, right? I want to bury my head in the sand. I want to buy my gold. I don't trust the government. Bonds are collapsing. Blah, blah, blah. This is, hey, John Roth being made fun of because he was selling his Nortel stock. Growth will never end. We're all going to get rich. The baby boomers peak earnings years. Oh my God, it's so wonderful. Blah, blah, blah. Well, and then here we are, don't trust the government. Don't trust the US dollar. Don't trust anything. Gonna bury my head in the sand. Ironically enough, I think you could actually make the argument that we're not really overly pessimistic right now, but we're not overly optimistic. And if we were closer to one end of the range versus the other, we can do the numbers here, but I think you should be able to see, there's the bottom end of your range, and there is the top end of your range way up there. So are we closer to the bottom or the top right now? From what I understand, the economics are starting to look a little challenging. And so in a weird sort of way, that does kind of make sense with what we're seeing here. I would not be surprised if at some point in the not too distant future, we take a serious run at these lows. I mean, maybe it just it could be just a dump like that. I don't know. But you can see, what are we supposed to think if we ever see the market smiling at us? You can see that the writing is on the walls. This move up, theoretically, if you believe in these cycles, and hopefully you can see, right? We could probably even put a sine wave on here. Do I have sine wave? There's this, but I don't think that's a sine wave. It's one of these. There it is, sine wave. I think it looks something like there, right? Something like that. So, and unfortunately, why they don't have prices for gold here to be able to do this going back 50, 100 years. I think they do that just to try and, con us. So you can see how long this sine wave bottom took to form here and how long it took for this to work its way up to the top, right? We might even drag that out. That means that I don't think that we actually get into, I would prefer paper assets until way over here, which is like literally like 2035. That's when the next sort of cycle peak is. Could we spend, 5-10 years here doing something like that? Sure, that wouldn't surprise me at all. All I would just simply say is if you want to play that move, just simply follow the market structure signals. So, you could call this a double bottom. You could call that an inverted double bottom or head and shoulders, but there's no real shoulder here. I think if anything, I also like thinking of this as kind of like a descending wedge here. Something like that. Actually, it looks more like a channel, eh? Anyway, it might not even set up very pretty for you, but I definitely think that when you see like these M's, gee whiz, that is very powerful information. I think we just got one. So I definitely like the idea of some sort of test of this low. And if we look at something like it's a little bit off topic, but hopefully it'll help you understand this. If we look at the gold versus the silver ratio, this is kind of the same thing because silver is more of an industrial metal. Gold is more of a going to bury my head in the sand. I know it's not going to go anywhere, kind of thing. So if we're moving in gold's favor, that would be, and just think of this as how many ounces of silver does it take to buy 1 ounce of gold? So up here, it's going to take 126 ounces of silver to buy one ounce of gold. Down here, it's going to take 30 ounces of silver to buy 1 ounce of gold. So strong. Did I get that right? I might have gotten that backwards. Gold. Yeah, actually, no, I guess that's right. Sometimes I get these things backwards. Might be 1990. Strong. Actually, that's interesting. Okay, so if that's the case, 2007, 2008. So obviously there was a crisis there. 2008, 2009. I don't really remember that. So we went into sort of crisis mode. I think to a certain degree went into crisis mode here just even recently because the inflation numbers started to get a little bit out of control, and you can see that is right through that sickness event. Then in I guess March of that year, that would be right into actually right there, right? That's when they authorized the U.S. government to issue just a ton of debt, and they took interest rates to zero, so the economy went crazy to the upside. And oh, gee whiz, well, if you print all that amount of money and the economy goes crazy, is that going to spark inflation? Which is, I think, what this was all about. And I hate to say it, but interesting how recently you can kind of see that people were like thinking, well, things are going pretty well, rock and roll. And then, we just put in this W and we're starting to break out here. So I think that this W starting to break out here is, there's a bit of problems, right? And you notice what happened when this W came in. We had to go through quite a long period of gold outperforming silver. So let's see what happens here. But you can clearly see gold has dramatically outperformed silver over the past few weeks. And I think that this is implying that we've got some economics uncertainty coming our way, to say it politely. The interesting thing too here is that, of course, we do have a big political event coming up here. And so I do think that the market, to a certain degree, is very uncertain about what the future holds going forward. And actually, a great way for you to see that is good old copper, professor of economics. And actually, I have heard some people on the interneting talking about the copper gold ratio. I've never used that before, but anyway, professor of economics. What is the professor of economics saying to us? What are we supposed to think if we ever see the market smiling at us? And how long does it take for these smiles to play out and then actually start forming W's where we can start thinking, hey, you know what? Maybe we've got a bull market here and the economy is actually doing pretty good. Also, too, really good example of that volume impetus where you can see buying pressure all the way up top here was kind of waning. So we actually got a little bit of a volume top here in copper until that top is actually broken and we actually start seeing higher highs and higher lows out of the volume, the buying interest in copper. I don't think that this thing's going anywhere. Anyway, point of the matter here is copper starting to look pretty heavy here. Professor of economics, it feels as though there's trouble brewing. Let's put it that way. So whether it be things like the Dow Gold ratio, looking like we're heading back towards preference towards the hard metal, that would be economically troublesome. Whether it be copper itself. And then whether it be, and I think as I had said before, I'm a little concerned here. I suppose, I don't know whether it's healthy for us to be looking. This has my head scratching. How do you actually take in the money printing into the equation here? I mean, if we take the money printing into the equation here, and we're looking for bases in price to measure retracements against, I think what I'd have to say is this, I think, becomes a major pivot low. So that means, wherever this top eventually comes in, I don't think that we actually see stability. Sort of, this is the base. And actually, I do like this kind of thinking. Notice there is the 50% retracement of this range. And all that is just a test of the pre-sickness highs. And what's fascinating, of course, is that this is Donald Trump's heyday. Like right through here, everything was rocking and rolling. Then this sickness mysteriously came out of nowhere. And like literally, there's the past 4 years. If he wins the election again, do they just do nothing more than just bring the market right back down to where he left off? And then he sort of continues his tenure from that basing point. I actually think that that's not unrealistic here, folks. That really isn't. And then actually an interesting sort of aside to this is, I don't know, somebody tell me. I always ask you guys, I don't know whether anybody ever listens to me, but let's see. Well, there's another opportunity for you to chime in, and all you longtime watchers, you know what the question is. So this is, if anybody's watching this for the first time, this probably blow your mind away because you probably don't realize this. But who can tell me what is the statistical probability that all of these holes on this price chart get filled in? And I mean, look at the size of that hole. That's what he said. I could lose my wristwatch in that. Oh, wait a minute. That's terrible. You shouldn't talk like that, Brian. Thank you, Crypto Not. Actually, it's even a little higher than that. Shark Toshi, he used to love to post that statistic every time I'd see it. And then we'd have like the demon finders. Actually, I wonder if maybe we even saved that as a chart. Anyway, that's total off topic. So is that not a realistic possibility? I think so. And in a weird sort of way, you can kind of see, what does this kind of look like? Because you never know, especially with the way the banksters, because the banksters, ironically enough, the one thing I will absolutely say about our society is the banksters are absolutely horrible at this whole sort of public relations thing. And I did find it interesting that through the early 2000s, and I think that, Alan Greenspan was a perfect analogy. He would often say that if you understood what I said, then actually I'm talking way too much. And I love that line because, frankly speaking, the central banksters, if they're doing their job correctly, they're there to control inflation and keep the money supply relatively solid and, keep the base of the economy working. Then they got into this stupid dual mandate crap, which is nothing more than it gave the banksters carte blanche to do anything that they wanted in the system. Oh, they got inflation, fine, we'll raise rates. Oh, we've got weak job market, fine, we'll lower rates. Keep in mind that the banksters and specifically the central banks, they're always late, they always act too slow, and they're always wrong. So what ends up happening is, yes, they do crank interest rates up. They always go too far. And that, of course, causes the market to break. And that causes the unemployment to rise. And then keep in mind that the unemployment rate is a lagging indicator. they start to act and freak out on employment data, but that's late and it's lagging. The market's already broken. So then they act in a panic. They always act too far. They go too much. And then that, of course, causes the inflation, and it just goes back and forth. And this is the game that these stupid banksters play. So anyway, point of the matter here is, if we did see the market come back down to things like 50% level, that 1987 crash scenario, like I said, if we do see the market come back down, fill in these gaps, if we do see some sort of big fractal that ends up forming here that could potentially be an inverted head and shoulders, honestly, that wouldn't surprise me one bit here. And as I had said there, I think the banksters learned a hard lesson that they need to have people who know how to talk to juries. They need to know how. They need to have people who know how to use the legal system to their absolute best advantage. Is there any one particular job set in our society? Hint, hint, hint. If the glove don't fit, then you must acquit. Any people in our society that are very good at saying exactly the politically correct things at exactly the politically correct times? And should we not make them the public mouths? Yeah, great, Del Moody. Actually, interesting to see you back on the channel. Good old Johnny Cochran. Do find it fascinating how almost all of those people that were in that trial, they almost all died of cancer, eh? I do find that fascinating. I wonder if bad karma manifests itself in cancer in your body. Wouldn't surprise me. Anyway, there's a bunch of rhetoric for you. So anyway, I guess what I'm trying to say is, if Mr. Trump actually does win, don't be surprised if mysteriously you actually see this entire stock market, the whole bullshit of this past 4 years, completely unwind itself. And unfortunately, the media, and keep in mind, this is what really drives you crazy about our society, is people turn on the TV because they remember, especially older people like me. Like, I grew up with Peter Jennings. I don't know whether you remember. And ironically enough, he's actually a cousin of mine. But I definitely know Peter. Poor guy. He also died of cancer. But also, when I was very young, Walter Cronkite, these are sort of the people that we look to in our society to tell us the truth. And the worst part about our society now is that those same people have been 100% completely corrupted by the capitalist machine, which, they used to call the media the fourth estate. It was supposed to be the agency that kept everybody honest in our society. And oh crap, has that ever been corrupted? And it's even so bad that you can't even watch things like public news. It used to be that, okay, fine, the major networks, they're owned by the corporations, so as a result, it makes sense that their reporting is biased. But even something like the public broadcasting, if you turn on the public broadcasting news, literally the first 5-10 minutes of the public broadcasting news is commercials. I mean, it's like, it's not for profit anymore. And yes, they are as manipulatable as any of the networks and their corporate message. It's identical. So it's sad there is no sacred cow now in the media that isn't either heavily biased to the right or heavily biased to the left. And as a result, the news that you're being fed is highly, highly manipulated. So don't be surprised. And I think, if anything, I really like this message, because I do believe that a fairly substantial market correction is imminent, which kind of sucks. I mean, nobody likes to hear that. If we actually put on all our technical indicators, we can see the divergences in things like MACD histograms. Keep in mind, this is a weekly price chart. We can see the divergences in things like relative strength indexes. We can see on a weekly basis, Willie is stupid. So you can make the argument technically, there's plenty of justification to look for this market to come off. Not really anything shocking here. In fact, actually, what I usually like to have on here is the 4-year business moving average. I don't know why I don't have that on here. Let's put on this one. Hey, there we are. So my favorite moving averages, because I like the fractal nature of them. They sort of translate. If I change this to a different time frame, each of these moving averages moves respectively. So you'll notice that if I put on like a daily chart, see how this 30 SMA, it will look a lot like the 200 SMA on the daily chart. So like you can see right now, this is what does that say? 38,972 right there. And if I change that to a daily, there is the 200 SMA right now, and it's sitting at 37.9 and change. So you can see that the similarities here. And then the 200 SMA on the weekly, it works really, really well as sort of your 4-year business cycle moving average. And about once every 4 or 5 years, you notice that this thing has to come back and check that business cycle moving average. It works really, really well. So the point of the matter here is you can see it all the way down here. We had said 50% levels were down here. Could we get a scenario where we go careening through it, tag those 50% levels like our 1987 scenario, and then jackknife back up? And of course, through that orgy of selling, the banksters convinced the public, hey, you know what we need to do? We need to go and print more money, right? And then the whole fucking thing just jackknife straight back up and the orgy resumes, right? So all I'm going to say here is this market is getting kind of dangerous when we get this far away from these 4-year moving averages, even here. And this was, actually interesting. This was, ironically enough, this was actually the end of the last fear greed cycle window right in here. So all of what you've seen here since that event, this is actually now into the coming greed cycle, what you're seeing here. So one thing actually that does surprise me a little bit is, well, I won't get into that. We'll just leave it here. Does this carve out some sort of head and shoulders top? And I'm kind of thinking, yes, that's what we should be thinking here in the near term. So be careful here, everybody. What I would just simply say is, I don't know, you tell me. Are we supposed to think about anything if we ever see the market smiling at us? And damn, look at the size of that smile. Oh boy. This market, it's got trouble written all over it. Now, is it just a simple correction like this? Boom, go and put in W's. All right, we'll start the game all over again. Could be. I'm not going to predict exactly what's going to happen here because nobody knows. What I would say, though, is here's kind of a fun tool for you to use, chaos theory. Actually, we have a whole bunch of videos that I've done on chaos theory. So you can definitely find those kind of videos to watch. 2.618 is a popular one that I like to use for these chaos levels as initial objectives. So I would definitely say 2.618. Usually, actually, we dump into 4.669. So the fact that we didn't here actually is a little bit concerning. But 2.618 would be a nice initial objective. So if we do the same logic off of there, then, oh, what a big surprise, 2.618, you can see there is that 4-year moving average. This has got trouble written all over it. We also have talked a lot about Bitcoin and things like Ethereum putting in tops. This is the daily chart. So I still would consider this just healthy correction territory for the time being. Guess what I'm worried about here is, does this actually now turn into some sort of head and shoulders top that sort of sets the stage for that bigger correction down the road? So you can see, actually, look how long this took to roll over. I would not be surprised if this same duration had to play out. All right, you could probably, and I hate to say it, but that kind of it, kind of a final piece to this, and then I'll leave this, and then we'll head off and talk more, broader market and stuff like that, and crypto. There was a gentleman that said that he had a dream that Donald Trump got shot, and he survived, and he went on to win the election, and then he saw this horrendous crash in the economy. And what I'm just going to simply say here, I'm going to throw this out because I do like this thinking, is it, initially it's going to be labeled, and the media, of course, they're going to label it as crash. And of course, it's all Donald Trump's fault, big red candle here. It's an absolute disaster. And, we should impeach him again. It's all his fault, blah, blah, blah. But I might actually argue that this is exactly what Mr. Trump would like to see. So have a nice big wipeout here, the end of 24, beginning of 25, put in a base here through the, spring, summer of 25. And then, of course, our crypto market set up for a nice big fat counter trend rally into the fall and winter of 25, early 26. And of course, maybe some give and take. But the point here is that he gets the recession right away. And of course, he can go to the public and he can say things like, well, this is all Biden's fault and all their policies. And I'm just trying to fix all the damage that they've done. I've heard a bunch of sort of, what do they call them? Pundits, I think, say that this would actually be absolutely perfect scenario. And then in his latter part of his presidency, the market starts working its way back up. And of course, everybody's in love with him. And maybe this J.D. Vance guy inherits the Republican nomination into the term following. It'll be interesting to see in 2028 whether Mr. Trump still has his scruples and whether he would actually like to still be president, and whether he puts up a fight. Well, it might be interesting. The end of 2027, 2028 is supposed to be a pretty tumultuous time in our society. Anyway, so I do like the idea of the market coming off here a chunk, setting that base in early 25 to set the sort of the what does the latter part of his presidency actually look like. I do like that thinking. Now, whether this rolls over into some sort of horrendous head and shoulders, and then we lose these levels to actually have to go all the way back down to the COVID lows, I don't think the 1% is going to allow that. I think what they wanted to do, and notice when they brought the market back down to that sort of pre-COVID market state, instantly the market turned back up. And they had painted this whole time period as the market's crashing, crashing, crashing. It's the end of the world. I think you're going to see the same scenario. And what a coincidence. I don't know whether any of you guys noticed, but in in October of this year, right, the fall here coming up, there's actually a huge eclipse event. And by the way, maybe it was here, we actually had a big eclipse event that actually turned the market back up. I would not be surprised if this eclipse event coming up actually is the turn, and that's the end of whatever this sort of bull market was. Mr. Trump is perceived to have he is going to win the upcoming election, and actually, in a weird sort of way, it doesn't even really matter which party wins, because if Camilla comes in, oh my God, the socialist rhetoric is just going to go through the roof. So. I don't know whether that helped you see sort of what I see in the marketplace, but that's kind of what I think our next year is going to look like. This is going to be a bumpy ride, folks. So let's head on over and put this into context with Bitcoin, because clearly that's the only thing. Well, no, I'm not going to say the only thing. I think that's primarily what you are all interested in. Um, and looking at our weekly price chart, this chart's getting a little bit old now, but interestingly enough, I think it's been a pretty good roadmap for us to use over the past 6, 8 months. I definitely think that we had the market rally into some fairly important levels. It is interesting to see how, fog and bombs, we didn't quite stall out at 2.618. And if anything, if the market tops out before 2.618 and just goes blowing through it, then it does mean that 4.669 is going to be respected. It was interesting that this was basically 4669 was Mr. Fink's ETF event. He got his ETF. Then they had one more push higher here up into the old all-time highs. And interesting, look how that was right up against an 877. So this is technically actually a pretty darn important level. And you can literally see how the market was fighting like the dickens. And I think, I've said this repeatedly. I put out tweets to this effect, and I did see some of the people that I do respect in this space, some of my old students, other sort of people that have been in the Bitcoin space for quite some time. I put out tweets sort of saying, it looks to me like there's a lot of people who are more than happy to book sales up here around 70 G's on Bitcoin. And think about it, 70 fucking grand for just one of these silly Bitcoins. That was a pretty respectable level. I actually don't think that if this cycle was like previous cycles, we should not have gone straight up here to new all-time highs. If we look at the what I think is actually a similar cycle, but if we look at the previous cycle, this is actually what I think is a normal healthy cycle. Rally up into mountain man levels and then break back down into reload zones to set the base for face rips higher here. So the problem with this right now is, have they sort of baked in a lot of this coming bull market here by doing this, and Mr. ETF dickhead kind of coming along here and securitizing Bitcoin now. I don't know whether this is really the opportunity. Like, what I wouldn't be surprised. I remember one guy that I really respect in this space. I like him, Chico Crypto. I think his name is Tyler, if I'm not mistaken. I don't know whether that's his name. I haven't really seen too much out of him lately, though, which is something that kind of, if anything, it kind of makes sense, because the last time we had sort of a topping market, he was very stressed because he could clearly see that there was no value with what was happening here. Remember, Allen was highly manipulating this space around his silly Dogecoin and all that nonsense. And I remember Tyler got very, very upset, even to the point of like crying on social media, going, I got to take a break from this. There's no logic to any of this. And sure enough, he was right. And the whole market had to get absolutely destroyed. Did hear him talking quite a bit through all of this, but I have noticed that he's actually has gone pretty quiet. I mean, maybe I'm mistaken, but I haven't really seen a lot out of him lately. But he actually made a prediction. Predictions. I don't really like that kind of business, but he did make a prediction that he figured, based on the previous percentage moves of these bull market runs, especially like this bull. You can't even see it here. Let's change it to a log chart so you can see it. So where are we here? So this bull run, that percentage move, and this correction percentage move. Then this bull run, what was the percentage correction move? And his sort of thinking was, and it's sort of like play connect the dots, boom, boom, boom. If we're sort of geometrically moving, then probably that means that the best this thing's going to do is maybe like 110, 120 or so, something into this cycle. You can kind of see how the tops are getting less and less and less. Although I will admit this chart's probably awfully hard to see. We'll just get rid of all the drawings. So you can see, what's this move here in relation to this percentage move? And should we expect sort of the same sort of thing that, yeah, we're going to make new highs, but it's going to be diminishing returns? I kind of like that thinking. And that paints a high of like 125, 130. If we're lucky, keep in mind that this thing has a fixed supply. And the reason why it's moving up the way that it is because these cocksucking banksters are diluting the shit out of this thing that it's being priced into. So in a weird sort of way, you don't really want to see $1 million Bitcoin because that means fucking loaf of bread is going to be $500 a loaf. If anything, you'd like to see that the banksters maybe are getting a little bit of religion and they're not diluting the fuck out of the currencies. But I think somebody even just posted in the YouTube page there that the banksters, or maybe it was in the TRI lounge, banksters have gone and taken the world money supply to another new high. But I guess the point here is, I don't know whether Bitcoin is where you're going to get rich. Something though that does really interest me here though, and unfortunately, I don't think you guys are going to like this, but what the hell, here we go. One part of the market that really does have my attention here, I'm not quite sure. Actually, here, let's go back to regular. Boom. All right. So then we'll just redo this. All right. So there we go. Keep this image in mind. So this is the base off of the previous cycle. So previous cycle peak, where, I mean, Bitcoin, you can see this went from like 3,000, 4,000, all the way up to hitting a high of, what is that? 68, 69, whatever, thousand. I mean, just an absolutely insane increase. I actually think, call me crazy, that Ethereum is actually doing this pattern right now. So if we go and look at Ethereum price chart, oh, look at that. We just hit the ABCD objective. God, can you believe? Look at that goddamn runner. It's up almost $1,000. Jesus. Pretty impressive, eh? Anyway, it just goes to show, trade your setups. So there is the Ethereum chart. Notice it did not go to new highs here. Didn't quite stall out at 61.8. But it does, to me, look more like that Bitcoin chart from that previous cycle. So here we topped out at 78.6, good old Brian's favorite fib there. Remember that Bitcoin chart from that previous cycle, it topped out at 61.8, which I like thinking, because if we actually look at the price action that Bitcoin did following this blow off top, notice the very well-defined M, and then the very well-defined M within the M, and then just to sort of slow grind lower, put in a little W off of the 61.8. This is the bull. This is the bull. Oh, head fake. Fuck everybody over. Could we see a repeat of this on the Ethereum chart? God, it sure feels like it. Yeah, let's keep this on the screen. So lots of writing on here. Sorry. Let's just get rid of everything here. So notice well-defined top. And now, oh boy, an even more well-defined top. I mean, is that the market smiling at us or what? And if I do things like reload zones, this is kind of freaky. Remember that Bitcoin, it bottomed at 88.6. And remember, I used to work with a guy named Kevin. And he actually had the balls to have an order working at that level. The whole market and the whole world thought it was absolutely coming to an end here. And this is what I think they have planned for Mr. Trump and his for sort of first 4 or 5 months of his new tenure. That's what this dump, I think, is going to be in the stock market. Is they're going to manufacture some crisis. And ironically enough, like I said there a moment ago, I don't think Mr. Trump's actually going to be too concerned about it, because he's going to, the easy way to sell it to the public is, well, this is Mr. Biden's presidency. These are all these policies. So what do we want to do? Should we maybe stop the socialism, people? What do you think? Is that a good idea? That's the narrative I think that's going to be pitched. But I would notice how the original bottom here, 88.6. I mean, maybe we go down that far. I would just have your order working at like 78.6s, and maybe you have to just stomach that. But anywhere down in that area, wow, that's an absolute gift of a trade. On the Ethereum chart, that would just basically be just a revisit of this original double bottom. And technically speaking, people, this isn't really anything out of the ordinary. It's not like it's like, oh my God, this would be an absolute catastrophe. I don't think it would, because frankly speaking, I've actually heard Mr. Vitalik say repeatedly that he does not like his supercomputer to be this expensive. Interesting how this trend line, like what I think is going to happen here, kind of like what you saw to that Bitcoin in the 19 cycle. I think we dump down into things like Mountain Man. We're going to put in some sort of bottom, heading into that election. And it's going to feel as though, okay, that was the bottom. Then they're going to, like I showed you on that Dow chart, maybe they have a nice counter trend rally. And then there's going to be some sort of manufactured crisis there in the first quarter of next year. And of course, they're going to be calling for impeachment and, throw the bum out and all that, blah, blah, blah. But it absolutely destroys everybody. And this ultimately is our bottom in the crypto market. Call me crazy, but that's kind of what I'm thinking here right now. And I don't know whether it's specifically about Ethereum or whether it's just, the altcoin market in general. Because gee whiz, there's that same damn image. So it's not necessarily like Mr. Vitalik is the problem. I think it's just, we got to the point there back last winter. You all heard this. I mean, it was ridiculous. This time it's different. Just go and buy Bitcoin and you'll get rich. I don't know whether I heard that specifically about crypto in general. I mean, when I heard people say that about Bitcoin, I thought that was really irresponsible. 500,000 cryptocurrencies created on the Solana network through this really nothing more than just a counter trend rally in crypto here. Are these not the hallmarks of a what the hell are you people doing kind of market? Sure, it sure feels like it to me. I might also argue too, just sprinkle in. This is a commodity proxy. Is there other types of commodity proxies out there in the world that actually kind of look like this? And the worst part about it is that the Canadian real estate market looks exactly like this. I mean, the charts look almost identical. Really, really scary. Although, no, I'm going to take that back. Canadian real estate market actually doesn't look like this, but the sort of fear, greed bubble cycle that we often talk about in the crypto space. I actually did publish it, sort of claiming that the Canadian real estate market looks a heck of a lot like this. I think it's much, much bigger time frame. I would definitely say there's a bubble in the Canadian real estate market, but it's a slow moving train wreck. But I would say, if anything, the one good part about crypto is it moves at lightning speed. The one bad part about crypto, though, is it moves at lightning speed. And a lot of these kids that get involved in this don't realize how volatile this shit is. And they come in here and they never look at price charts. I've told you before, if you really want to know what the public sees, when they are quote unquote researching what to invest in crypto, this is about the extent of their research. And if you want a fun conversation along these lines, pull up Mr. Actually, I can't even remember his name. I want to say Finkelstein, something like that. But anyway, do you want to buy some shit coins? And he just sits and he goes, "Oh, Ripple's up 1%. Oh, Litecoin's down 2%." And that's really about as far as the public takes their research. They would never look at a chart like this and go, "You're going to buy up here? What are you, crazy?" So it is what it is. So I really don't think that there's anything to get too excited about here on the bull side until, ironically enough, until these charts actually start looking like this again, right? And that's sort of your saucer bottom kind of talk. And then when we actually start seeing these W's come in and we start doing things like, wow, gee whiz, if this thing breaks out to the upside, well, maybe we can start drawing chaos theory and giving us actually some upside targets. And that's basically exactly what that study is. So do we have anything that looks like that right now? I suppose maybe if we're really, really lucky, these lows hold in here. We are in the process of Ming out. I mean, there's a big fat M staring you in the face. And its technical objective, just like we saw with these 2.618s, 4669s, 877s, etc. And actually, I think this is a really good one. This W down here, 2.618, doink. This was a really fast one. Zing, 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 boom, 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 boom. Actually, he had to go to 4669. So, you can do the same logic. There's an M, there's an M, there's huge M's all up in here. So I like the idea. There's 2.618 off of that huge M there. There's 2.618. It's already been hit. So we're starting to roll over. 2.618 off of this one is that test of that level again. Notice this AB equals CD is floating out below these lows. That to me says that this thing has to get taken out. We'll see. Nothing is ever guaranteed in this business, but I've played harmonics long enough. I would be shocked if this wasn't traded too. Good old 61.8 Mountain Man's just sitting there floating around. Of course, we always say, if you want to try and find a bottom in the market, look left. So you can see they took the market down into these lows on this event, then counter trend rallied it, then broke through these lows. So that's off the table. Look left. So they took the market down into these lows and then bottomed it. Then they've M'd out. So here we are back testing these lows. And if we take them out, well, the next key lows are all down in this area here. And there's that 4669 just floating there. And there's a 4669 sitting there. And there's the 2.618 off of the entire range. So as you can see, we posted, or at least I posted months ago. I've been showing you this chart forever. Now, a lot of confluence down in this area. So if I was thinking, where should I be looking for support? Should be down in this area. So let's see how we act off of this 2.618. If we're lucky, we get some sort of violent spring back, but we can't turn bullish here, folks. And if anything, God, this is such a good example. If you turn bullish on the break of this trend line right there, oh boy, you just walked into a trap. So regardless of what you see happening here in the short term, we cannot turn bullish until we've recaptured this trend line and then gone and put in some sort of bullish structure on the other side of that trend line. And the irony of it all is that this trend line is still very much valid. So that means that, maybe we get buy setups that come in through here, and that sets up a nice bull A, B, C, D, but same logic up here. We get up into that area. That is not a trade. You got to wait for the market to get on the other side of this trend line and put in structure on the other side to get ready for the next bull leg. So we just had an M. If we're really lucky, like I said, maybe keep our fingers crossed. Who knows? Maybe this is a harmonic. That goes, actually, that's not right. I'll try that again. The harmonic goes A to B to C to D to X. I do A, B, C, Ds all the time. Anyway, it's X to A to B to C to D. Maybe this would be a PRZ down below here at 38.2. What is that? That says 39.2. So it's a better part of 38.2. It's pretty close. 40. It's acceptable margin of error. If that's the case, then we want to see 88.6. So we're at 89.2. That's definitely within the margin of error. So what we want to see, if this is really a bull, is we'd like to see, first off, can I get some structural signal down here? Ideally, I'd like to see a nice W. If we do get that W, then what it tells me is there's probably going to be a trade that sets up something along those lines. So this will be a trade back up into this trend line. And could you make money on that kind of move? Keep in mind, this will be probably reload short zones. Yep, right into there. So there might be a trade that sets up through here. Let's watch how we behave through here. Unfortunately, though, like Trader Brian, I would just consider this nothing more than a dead cat bounce, unless, of course, we got this to come in on the other side. So let's get rid of that guy and let's go like there, and then let's go. And then who knows where? I mean, the sad thing is if we just spike straight back up into moving average resistance, then I would expect that that's going to set up another sell setup over here. So if anything, what you'd prefer to see is, can we please just calm down here? Just quietly put in some sort of bullish structure, and maybe we get something like that that sets up a cute little trade there for this move up into this trend line test. And then same sort of logic, if we can put in some sort of consolidation at that trend line test, then that sets up an AB equals CD for our anticipated move up top here, something like that. Lots of work to do ahead. Can't really even think about any of that happening right now, as we just tanked to new lows here. I suppose a big driver is going to be, what does this Ethereum do? And actually, let's try and put all our fancy lines back on the chart here now. There we go. So in the short term, as I had sort of pointed out, I thought it was interesting that I think a significant technical level was just traded to here. So this will be interesting to see how Ethereum behaves at this point. The problem that I have here with this is, number one, you can see today's price action does go ahead and confirm a hugely bearish market structure signal there. I mean, maybe if we're lucky, this candle just turned into some crazy ass hammer and we can get our asses back above here, but that's asking a hell of a lot, folks. As you can see, the short here off of the top is still working, and there's no reason whatsoever for me to touch this other than taking profits into this bearish objective, maybe even take half of the position off again. Although I don't really want to touch this. I would prefer just to leave this alone. I wouldn't be surprised, hopefully there's some sort of summer silly season here for crypto, but I wouldn't be surprised if maybe we could do something along those lines if this is some sort of capitulation low. We'll see how today ends, right? This is a daily chart. And as I had said, going forward, what I'm really kind of thinking here is the ultimate sort of end to this move, especially through that whole Trump stuff, if it plays out the way that I think it does into the early next year, is I think we do have to work our way all the way back down to reload zones. I really do. I hate to say it, folks, but that's just that's my 2 cents on all this. And of course, that doesn't get any links or helps or whatever's. But hey, if you're getting some value out of this, hit the like button, subscribe, ring my bell, ring my bell, ring my bell. At least that way you get notified when we put out these videos going forward. And actually, I think what we're going to do, whatever it's worth, in the next couple of weeks, I am going to take a bit of a break here. take a couple weeks vacation, just sort of check out for a while, maybe hit the reset button kind of idea for me mentally going forward with this venture. What I would, if you are a regular watcher of the free broadcasts and stuff like that we do on YouTube, I think we're going to call that back to maybe some pre-recorded videos. Don't do the lives anymore. And maybe I'll just do the live Broiler Chicken Show here on the weekend. I think maybe in a weird sort of way, maybe less is more in this space. So point of the matter here is still bearish. Market's now smiling at us. I do kind of like the idea of a nice counter trend rally here. Interesting to see whether we do actually close this bar here today below these lows. If we do, then that does confirm the smiles. And it does, of course, paint towards lower prices. And the interesting thing is now, just on dead cat bounce, I could completely understand somebody hunting a long setup down here and taking a shot down in this area if you had like 3 reasons to justify your trade. We might say, well, 4 hour, okay, we have this bear A, B, C, D. Do we have any signs of divergence coming in here? If you are a trader, we've got Willie stupidly oversold. I don't see any bull divs. And keep in mind, Monday morning, I wouldn't be surprised if Wall Street comes out. I think these actually their futures on this thing. So I wouldn't be surprised if they come out, they paint a lower low here to get everybody nice and bearish. But you notice that your momentum indicators do not go to lower lows. So that's what I would be actually watching as the next step. Then once that divergence signal has come in, then I'd be looking for ZOWs, and that might frame your trade for that move back up to that trendline resistance. Could you fish for a 2-to-1 setup? You can see where trendline resistance is here right now. You can see previous highs. This is probably where they're going to try and stop the counter trend rally if it does actually materialize. So the question on that would be, do we have things like 2-to-1s set up on that kind of move? 195, there's 2-to-1 even. So, does this set up off of the PRZ? Could. Do you know what a PRZ is? If you don't know what a PRZ is and you fancy yourself a trader, maybe consider getting into our education program. I'll tell you, I haven't met any educator in this space that gives you such a robust education into all of these fun little tools that we like to use than TRI. I mean, I definitely see that there are people that teach like one particular methodology. There may be specific bent on the market, but I've never seen anybody teach the robust sort of how to actually build and run a business of trading the way that TRI does. I'm so immensely proud of this community. And keep in mind, our education program, if we actually do from start to finish, it's actually well over a year long. So there's plenty of material to digest here. Then, for whatever it's worth, if you actually do go through the entire year of learning, you get exposed to all the various different tools that we like to use. Like, for example, the harmonics that I showed you, we don't teach that until level 3 because our harmonics trading and things like PRZs, that's very difficult trading. So, there, and actually we have an OG on the site who's been working with me now for, easily 10 years. I think I've known Stephen easily for 10 years. Grim, he was actually in, I think, our very first or second education program. So Grim's been working with me at TRI for 10 years. Marat, he came on board in like 2015. So all these instructors, they've all been working with me for, a better part of 10 years. So Stephen, who is sort of our harmonics quarterback, God, he's an absolute whiz at harmonics. If you like harmonics, man, our harmonics room is second to none. Anyway, blah, 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 blah. Point of the matter here is maybe we're setting up a trade just because we happen to hit this PRZ here. If I was trading this particular bot setup, which would have me short there, move stop to scratch, move stop to trailing, I should be ringing the register here. This trade in particular was off of shorting this double top, and 2 to 1s take profits, and then just put your stop. I'm actually using market structure, so I've got my stop just above these highs right up here right now. On this, it's just another way to skin the cat. And if anything, what I'd like to really try and do, if I could, is just have this position open, if we're really lucky, the whole way down. I mean, I'm not in a hurry to close it out, so we'll just see how it goes. Okay, so that's about that's about 20 to 1. So I just spent about an hour and a half kind of giving you sort of a roadmap of what I think is going to happen here with the market, the broader stock market. And then how does that play into the Bitcoin story? Oh, interesting. Look at that. They're already trying to carve out a hammer here. This is off the 4-hour chart. So you might even argue, in fact, actually, this is a gentleman that, he's a very good educator, and I've been following him for about 10 years now on the internet. He's maybe even longer than that. ICT, I think, Inner Circle Trader, I want to say. I think that's his name. I can't remember what his real name is. Nobody ever says real names here. In fact, actually, some people actually call me CR Investor. Oh, you know that guy, CR Investor? It's like, actually, my name is Brian, but anyway, nice to meet you. But his concept, if I'm not mistaken, is hunt for the breaking of previous market structure levels, which I kind of think that is. Then let the market sort of tank and do its thing. Then try and what I do, and this is my interpretation of his thinking, is wait for that counter trend rally. I think he likes to call this like fair value gap. I could be mistaken on that quote. I don't know. I like the idea of hunting for mountain man retracements, and you notice that's right up against those highs, which is probably on ETH, nothing more than a rally back up against these highs. You can see that 2 to 1 potential trade setup work off of that kind of event. They've got, of course, everybody dying 1,000 deaths here. It's fascinating how you can see all they've done here is just bring the market right back down against that original market structure bottom from early July. So I would actually argue that really we haven't done a lot of technical damage here. This to me looks like nothing more than a trading range. And what's scary about something like Bitcoin is that's a V-top. So V-tops should be tested. And oh, what a surprise. Here is our original bearish market structure. Remember I said, don't take a trade unless you see a W on the other side of this trend line. No W there. Not even really a W there. That just looks like poop. Then no W here, no W here, no W here. So wow, what a great analogy of these damn trend lines. So notice that trend line sitting right there, good old Brian's favorite fib, 78.6. Don't be shocked if you see this damn thing right back up into these levels. So my interpretation of Mr. ICT is that actually I would short that 61.8 tag, but I could totally understand any kind of movement up into this window up here. That is a fantastic trade location. So you want to try and hunt longs coming off the lows here? You saw that the Ethereum didn't have any bull divs working. Look at that. This is your 4-hour chart. You can see the bull divs forming here on Bitcoin. You can see some buyers are trying to step up here. I mean, they're trying to buy. Is that a hammer? Is that a dragonfly doji? Not quite, but a hammer. Yeah. You can see Willie's stupid. So I wouldn't be surprised if there's blood in the streets. And, even the tweets I put out over the weekend are, if you fancy yourself an OG in this space, for God's sakes, reach out to somebody and just that you think is kind of teetering on the edge. Keep in mind that this thing's run by Fink and his Wall Street crew. Could they come along here and pull some FUs just to piss us off here through this bottoming window, reload zones against this original structure? Absolutely. So very rarely does one candle a bottom make. But, if we think trade location, number one reason to justify a trade, indicator confirmation, are these bull divs confirmed yet? I don't think so. So step 2, You're waiting for that bull div to confirm. That'll be a move through that high, whatever that high is right there. Oh, look at that. It's even positive. Fjord loves when this MACD histogram goes positive. And actually, I have worked with a number of people on the site that's their criteria to actually see these histogram signals confirm is when it actually flips through positive or flips through negative on structure. So that's an interesting anecdote for that. Oh, running out of time here. I got 15 minutes left. So I think right now we're in the stage of letting those bull divs confirm. As soon as those bull divs confirm, then I would go into, if you are a trader, right? Remember, this is lower time frame. This is not the daily, and this certainly isn't the weekly price chart. 4.669s were tagged, 61.8. So could we find a nice little counter trend rally to take us back into moving average resistance or trend line resistance? Yep, I think that's totally realistic, not shocking. And probably also too, if we looked at moving averages here, let's see what we got here. All right, so 30 SMA will probably be our keep us honest indicator moving average. Is that 200 or is that 30? Okay, I'll leave the conversation at this. I think you guys get the idea. If I was a trader and I was looking for opportunity, I think I might be hunting longs within the context of this bear slide. But let's see these divs all div out, and then let's see bottoms come in on price. Okay, I think let's leave the conversation at that. Heading on over to the Q&A document. Thank you very much, Chris, for keeping me honest here. AMA said there was a couple questions. And by all means, if you are a TRIer, this Sunday show is supposed to be for you. If I don't get to the questions here Sunday, then often on Mondays in the after party, I'll circle back around and answer questions. Again, we're going to reformat all of these videos and see if we can get this a little bit more efficient. So I don't know whether we're going to be doing that. If anything, I should probably get more religion to try and get these questions answered in this show here. So number one, in the level one program, in the money flow lecture, you mentioned that a greed fear cycle lasts about 17 years, 17 and a half years. And really what it is it's a generational cycle. And how long is a generation? Generation is 35 years, right? Think about you going from 0 to 35. Those are your formative years. Then 35 to 70, that's sort of like your earnings, adult years. And then 70 on, you're heading off to the old folks home. So, and of course, very few people make it to the end of the last 35 years. Do you think this period will be decreasing in the next few years as the appearance of new inventions and new technologies increases and grows more rapidly than before? Absolutely not. Because you know what I've noticed is, and Joe Biden is a perfect example. You can't fight age. You can't. And the worst part, oh, sorry, is that better? Was it the settings? Okay. So no, I don't, and especially like your formative years to 35, I don't think that changes. And really, the best way to look at this is that entire century over that last 20th century. I mean, ironically enough, I hate to say it, but I actually think that the peak in human civilization was actually into the year 2000. And that makes sense in my perspective, because remember, I started this video off with I'm a student of history. And you'll notice that nobody really talks about bad time, or no, how do you say this? Nobody really talks about how wonderful and how good times are. If you're talking about history, you only talk about like the bad times. So nobody talks about how happy-go-lucky people were around the year 1000. But do people talk about how bad things are and revolutions and that kind of stuff? I don't know. You ever heard of 1066? There's a pretty damn big sociological event that happened in 1066. And then what happened in 1200 and 1300 and 1400, right? The plagues. So I think you could actually make the argument that there was actually a peak in the civilization around the year 1000. And unfortunately, then civilization had to go into a massive regression. And it actually had to regress all the way into the Renaissance, hundreds of years. And then 1300, 1400s, we started basing. And I might even argue that into the year 1500, that probably was a civilization peak as well. But the point I would just make is that we just went through 2000. I actually think that baby boomer generation, they absolutely had it the best. And literally since 2000, I'm hearing a lot of people talking about death rates are actually increasing, cancer among young people dying of cancer. The numbers of people dying young of cancer is going up substantially. I was quite surprised to actually hear of that recently. Um, and of course, the banksters are making everybody's life much worse with this hyperinflation. So standard of livings are dropping all over the place as they're forcing us through this great reset. So I would actually argue that you're probably going to find that actually standard of living gets less. And the death rate, I wouldn't even be surprised if actually the death rate actually, the average life expectancy actually starts coming down. Then, of course, you got guys like fucking Allen who are saying, well, this is actually peak civilization. And we're actually going to see a massive drop off in the human species here over the next centuries. And if you think about that sort of century mark in 2000 as kind of a high watermark for our civilization, I kind of agree with that. So I don't actually agree with this statement. I actually think over the next couple hundred years, life is going to get substantially more difficult for us humans rather than better. I do actually subscribe to the newsletter that sometime over the next 300 years, we are going to have to go through that Terminator kind of event. And I think that civilization on the other side of that event will look nothing like what our civilization looks like now. So there you go. I don't know whether that answers your question, but that is exactly how I feel. And here we'll even say 17.5 times 2 equals 35 year cycles, of which, and we'll even say, of which there is a growth part of the cycle and a regression part of the cycle, where 17.5 years respectively. All right, and actually here, why don't we put that? I'm just going to say, no, I do not think anything will change. Now, what I've noticed over my career is the generational cycles, and God, I wish I had another hour here. Fuck. You know what? Chris, can you remind me to circle back? And I'm going to say part B of this answer will be on Monday's after party. And part B of this is if we, I will show you the chart of the fear greed cycles, and then try and understand that there's a whole bunch of other cycles all at play as well. And I think that the planetary cycle, the fact that the Jupiter Saturn cycle is almost exactly 20 years in duration, I think that actually is a more, how do we say this? Market timing signal, if that makes sense, signal. So part B of this answer will be, how do we combine the two? And how should we think about these cycles using the Jupiter-Saturn cross as our timing tool? Because what I've noticed is the generational cycle, you know what? I'm going to leave it at that. The answer is tomorrow. I almost went into the answer there. Okay, question number 2. Hi, Brian. Why do you want to stop your daily shows? They are simply amazing and the best guidance for all your current and former students and beyond. You're totally right, dude, whoever asked this question, but try and understand, I make no money doing these shows, and I've been doing this for 10 years straight, every single day, day in, day out, month in, month out. And the problem is the amount of people that are interested in the market is falling off dramatically, especially for things like crypto. And we're just not generating the audience that can justify. I mean, I don't understand this. Some idiot that I saw who's just like a little, I mean, like literally he still has diapers on, coming in, commenting about the particular real estate market, which I found hilarious. Like, this guy's some expert. He's still in high school, and he has like 1,500 views on his video. And look how many people are watching this video. I mean, this is just not an efficient use of both my time. I mean, 35-year market vet. If I put as much time and effort into my own personal trading as I do in producing these damn videos for all of you for free, God, I would probably be back at my old prop firm, and they'd be like, all right, Brian, looks like you're back on groove. Let's rock and roll. So, and then also too, remember, there is a ton of costs associated with keeping this place, this TRI place going. It's so the simple answer to you is that this just isn't good economics. Sucks. I mean, if my deal was, Spirit came to me and said, Brian, you know, we'd really like you to try and do this, right? But my deal with Spirit is, okay, fine, you know, as long as you keep the ship going, but this just isn't economical. I mean, I probably make less money income-wise from TRI than a guy working at fucking McDonald's. I'm not in this for the money, though. But at the same time, too, do I want to be busting my ass for these hours and hours and hours and hours that I give all of you for free? After 10 years and seeing only 60 viewers of this video, I'm running out of steam. I'm sorry, but it's brutal reality. So, you know, maybe the answer to this is maybe we need to start introducing a site subscription. You know, I don't know. I made a deal with everybody. Look at, if you finish the entire education program, you know, you get a lifetime membership to the site. Well, maybe that isn't good economics. I mean, how are you supposed to keep this place going? I mean, God, if I told you the costs involved in keeping these stupid websites up and running now, it's ridiculous the amount of money we're blowing on all this. Maybe what we need to do is find like a sponsor, right? Maybe we need to, this needs, you know, I need to sell my soul to the corporate world. And this show will be brought to you by Tide Laundry Detergent. And then that'll mean Brian's no longer allowed to talk to you about the brutal corruption of the banking system and how it's turned you all into slaves. I don't know. Give me some feedback. The problem is right now, the economics just do not justify what I've done here. I have given the internet, I've given the universe my soul here over the past 10 years. And hell, even last winter when I was supposed to be on vacation, I still came out and did these damn shows. I mean, I love doing it, but at the same time, too, I'm running out of steam and I'm not getting rich from doing this at all. The only reason why I'm doing this whatsoever is my wife, who's staring at me right now, looking at me from the pictures I have on my desk. It's the only reason why I'm doing this at all. I'm not making any money at this whatsoever. So that's my brutally honest answer to you. And my business partners are like, this isn't economical. It's kind of like how Jerry says, your deficit spending by all you governments, this is not sustainable. At some point, BMA, like what happens if BMA has a heart attack tomorrow? This whole thing just dies, gone. I mean, is that sustainable? So I appreciate that you guys all love the videos, but at the same time, too, we got to figure out a way to make this economical. I mean, how many of you over there on YouTube have I don't know, don't they? Is this thing monetized? Remember, I used to have I always see people on these YouTube shows that are constantly giving donations. I don't see anything like that on these videos, and maybe that's what we have to do. We've hired people specifically to try and boost the YouTube audience. Nothing. So the answer is that I'm running out of steam. It's just that simple. So there's your honest answer. Sorry, but it's the truth. All right, last question, then I'll head off to Lily, and I hope you all wish me good luck on the road. Hi, Brian. What happened with your collaboration with Coinigy? I just want to figure out if I can still trust those people. Well, I actually reached out. I really like Joe. Joe's an absolute sweetheart. What do you think, Chris? Did you like meeting Joe down there in Oregon? Is Chris still here?
Yeah, Joe's a fantastic individual. He's a really good
Yeah,
guy.
really, just absolute sweetheart. And I was totally interested in trying to reforge a working relationship with them, and Joe working for Coinigy. Um, he he was sort of my point man. Rob and Will, I never did talk to them again. Joe would say hello, and sort of Joe was the point man for me. And then I guess about a month or so ago, because I was asking for Coinigy to try and do things like, can you please have these videos that Joe and I are doing on your site somewhere? Is there some sort of library or something that you're disseminating these to? Can we maybe send an invite to the TRI school to the Coinigy user base? And I think what ended up happening to poor old Joe is that because I was asking for him to lobby for this stuff to actually get done, I think that the company that bought Coinigy out said, you know what, it's just too much of a headache to have Joe constantly bugging our site developers and stuff for this work that we're just going to get rid of Joe. And the sad thing is Rob and Will, who were the principals of Coinigy originally, they just got bought out by this third party company, which we won't mention. They even said to Joe, look it's not our decision. This is coming from up top. We love you dearly. And as I said recently, they gave actually Joe a really nice severance package. So as a result, Joe can't really say anything negative about them. But the bottom line is they just basically rug pulled Joe, which is really sad. Ah, yeah, Intel. Oh boy, what a mess. Actually, Intel has finally come back down into my buying window. So actually, remind me, Chris, tomorrow. I don't know, Waj, if you're part of the site, but we should talk about what my strategy is because I've been waiting forever for Intel to get down into my long-term reload zones, and it's finally here. So now actually I can actually start hunting longs. But yeah, Intel sure got bitch slapped there last week, eh? So yeah, I might actually do some buying on Intel here over the next month or two. And actually, too, this is Fjord's pick, but I think it's not a bad idea, especially, if you can ride out the next few years, especially through like next spring, things could get a little challenging. but I definitely like Sjord's idea of buying into these big tech stocks. He's pretty bullish on Alibaba. I don't know whether I like Baba or not, but he likes it. And technically speaking, I think the idea is appropriate. I like Intel. I'd be willing to step up and pick some up here down in the 20s. Yeah, I'll definitely be making reference to that as soon as I see divergence, market structure come in. I'll probably be pulling the trigger on Intel. All right, so that is 105. We have answered the questions here. And Chris, if you could remind me to circle back around and give the part B as to the celestial cycles and all the various different cycles that we follow and how they all work in conjunction with these 35-year cycles. I think that would actually be a really good conversation to have with the site, and especially like level oneers, right? Sort of put everything into context for you. So. Oh, all right. So have yourselves a great rest of your day. PMA for the win. Slow and steady wins the race. If we're really lucky, we just hit some sort of capitulation bottom. I don't know whether we're really lucky here or not, but it does look like here off the 4-hour, we're trying to carve out some sort of hammer on yield Bitcoin. And it was, ironically enough, back down against previous lows of the range. I would say that we should probably keep a real close eye on how the futures are going to act here. I do think that the futures that, they're using the ETFs to control the upside in the market, and they're using the futures to control the downside. I do think that Bitcoin and Ethereum have been monetized or securitized. That's probably a better word. So as a result, the weekend trading, it's kind of fun. It's the community itself, but I think definitely Wall Street's driving the bus here now. So we need to actually wait for buy and sell signals come out of Wall Street. Ironically enough, I didn't really get actually a really clean sell signal here on Bitcoin recently. This is a V-top, and it's kind of like a stop run on by either side, which means that technically we could run right back up. Wicks and tails like to be eaten. So don't be shocked if this was some sort of bottom end of the trading range. And then we got to sort of climb the wall of worry back up to the top end of the range. Not really in a big hurry to do anything here on the on closing out this position here. I'm just going to let it work and just do its thing. I guess the only other thing I would say is I am very interested in picking up poop coins. But as long as I keep seeing M's, and I have been warning the community of late, seeing a lot of M's. And I think actually this cripple here was a really good example. If you were slick through that end of July, end of June, July bottom, there were some really nice trades that set up. But for God's sakes, if you missed the original bottoms, don't chase. So you can see the market's just screwing with people right now. And you can see where reload zones are and old trend line support and resistance. So that's a V-top. V-tops like to be tested. This is going to be a really wild trading range in here, folks. But trade your setups. Like if you wanted to be a buyer of this thing, I think right down here at 45 cents or so is a pretty good level. It produced a 50% gain. I mean, they're not all going to double. If you're a little old lady, Nanny Nibbles or whatever, you're not actually doing anything here right now. But I would definitely say, if you are interested, keep your laser beam eyes peeled. And if you get a nice little pullback, and all of these, they're all looking identical. You can see this one, EGLD, right back down against its lows. Where are the W's? If they come in, I'll be paying attention. This ADA, right? You see the W, you see the rally. We're right back down against those lows. New W's coming in here. I'll be paying attention. But right now, I don't see a W here. I don't see a W here. I don't see a W here. So right now, we're just in cool your jets mode. Okay, I'm done talking. Have yourselves a great rest of your day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no wooden nickels. And the only thing left for me to say to you good people is get your butt in our school and learn how to do this stuff like a professional, and you won't get screwed by Gucci sweater wearers. And bye for now.